Hi everyone, welcome to the session. In this session, I'll be discussing about standard costing and variance analysis. Now let's move on to the next variance, direct labor variance. Okay, so under direct labor variance, as I previously explained you, we need to calculate two types of variance. Basically, it consists of two types of variances. There is another variance that we need to calculate provided you are given the information. So basically, we have to calculate direct labor variance, which consists of rate variance and efficiency variance. Okay, and if you are given idle time hours, then probably we'll have to calculate the idle time variance as well. Okay, so but basically, since this is a basic introduction to standard costing and variance analysis, I'll be focusing on the main two variances, which is the rate variance and the efficiency variance. So let's move on to a question. So I will explain you through a question. Product P has a standard direct labor cost as follows. Okay, you are given the cost of the plan or the budget for this product P with regard to direct labor. Labor grade A requirement is 2 hours, $5 per hour. Per unit cost is $10. Okay. During a period, 1,500 units of P were made. How many units were produced? 1,500. And the direct labor cost of grade A labor was 17,500 for 3,080 hours of work. Okay, so let's analyze this question. Now, what is our plan to produce one unit? The plan is you need 2 hours to produce one unit, and the cost per hour is 5. So therefore, to produce one unit, your cost is 10 per $10 per unit. So how much being produced? 1,500 units. To produce 1,500 units, how much labor was used? 3,080 hours of labor hours, grade A labor hours were used. At which cost? 17,500. So therefore, the total, the direct labor cost variance. How do you calculate the total variance? Simply compare your budget and the actual to produce 1,500 units. Okay, so to produce 1,500 units, you used 3,080 hours at 17,500. So 17,500 was your actual cost incurred. How much you should have incurred to produce 1,500? Per unit cost is $10 per unit. So therefore you should have incurred 15,000, right? So if you take the total variance, direct labor cost variance, you should have used, so direct labor cost variance, so 1,500 should have cost 15,000, right? So 1,500 units, and per unit cost is $10. Here $10, right? So how much did it cost? 17,500. So therefore, what is the cost variance or the total variance? This is the total variance, 2,500, and it's an adverse variance. Why? Your plan was to incur 15,000, but you actually incurred 17,500. Okay. Now the 2,500 total variance consists of rate variance and efficiency variance. Okay. So first of all, we look at the rate variance. How do you calculate the direct labor rate variance? Basically, you need to compare, okay, the standard cost incurred on actual hours with actual cost. Okay. Now actually, how many hours being used? 3080 hours were used to produce 1500 units. So basically, you use 3080 at 17,500. If you had used the plan cost, the plan cost was $5 per hour. If you had used $5 per hour to produce 3080, how much you should have spent? So which is 15,400. So to produce 3080 hours, you should have paid $5 per hour. However, it cost 17,500, right? We paid 17,500 on 3080 hours. So what is the total rate variance? 2100 adverse variance, because we were planning to incur 15,400, we incurred 17,500. Okay, so this is the rate variance. Now let's move on to the efficiency variance. So basically, the efficiency variance compares the standard hours with actual hours. Okay, so how efficiently the hours being used, this is what we need to calculate here. Now we should have used to produce this 1500, right, 2 hours. 2 hours is the requirement to produce 1 unit. On 1500, how much we should have used? Which is 2 hours time 1500, 3000, right? So 1500 unit should take 3000 hours, right? But how many hours were used? It did take 3080 hours. So what is our variance? So 80 hours were used more than the budget. Okay, so therefore, at standard cost, the efficiency variance is 80, and we should have incurred $5 per hour on these 80 hours difference of efficiency. So the total direct labor efficiency variance is $400. $400. It's an adverse variance because we should have used 3000 hours, but we used 3080 hours. So therefore, it's inefficient. So therefore, it's an adverse variance. Okay, 400 adverse variance. So when you compare this 2100 plus this efficiency variance 400 adverse, the total should be 2500 adverse variance. Okay, So to calculate direct labor cost variance, that consists of the rate variance and efficiency variance. As I told you earlier, if you are given the idle time hours, the idle time hours should be deducted from the hours taken. Okay, then we need to calculate the efficiency variance, and idle time variance has to be added separately. For example, let's say the idle time hours is $100, sorry, 100 hours. You need to remove 100 hours and you need to calculate the efficiency on 2980. Then 100 hours has to be the idle time variance, which is 100 hours times uh, standard cost per hour 5. So that has to be taken separately. Okay. Anyway, I'll be discussing a question on this. So then you will have a better understanding on how to calculate the idle time variances.